Hi, welcome to PhillipCapital's Weekly Market Watch. I'm James Chua, Investment Solutions Specialist with PhillipCapital Management. This week, the outlook for equities, as you already know, is very negative. The technical setup on the STI is obviously down. Price rests below both the 50 and the 200-day moving averages. Other than price alone, our company also tracks manufacturing activity in China, India, Brazil, and we see that these countries, which represent the factories of the world, are all turning sharply downwards. In addition to these two, the other issue of the crisis in confidence of the Western governments, there is generally a perception in the market that the Western governments are struggling to handle their own sovereign debt issues. Other than these headline issues, local investors in Singapore also face the threat of inflation. Inflation in Singapore rises above 5% in the last reading, and based on the normal toolkit that average retail investors have, such as fixed deposits, equities and bonds, they are actually not able to keep pace with inflation in Singapore. So this is a challenge. So taking the weaker economic outlook and the high inflation as a backdrop, one sector that we do like as a form of investment for the average retail investor is actually the Singapore REIT sector. The REIT sector is relatively attractive at the moment, paying a 6 to 7% dividend yield. In addition to the attractive yield, prices on the REIT sector as a whole are only 3/4 as volatile as average equities. So less volatile than equities, but still more volatile than bonds. In summary, this week the outlook for equities remains negative. High inflation in Singapore threatens to erode the purchasing power of the average Singapore investor. And our most favoured investment sector at the moment is Singapore REITs. Thank you for watching. Please tune in again next week.